Wednesday, August 28th. This is Liam McMahon with the Midweek Webinar. Thank you very much for joining me. We are going to run through a bunch of pairs real quick, take a look at second half trading opportunities, talk about what we may be seeing the second half of the week, and go from there. Please take a moment then to look over the risk disclaimer, which should now be on your screen. We'll get started. Okay. Let's go to the charts. Let's start with the requests. So we'll start with Aussie dollar. Let me clear my drawings. Alright, this is daily chart of Aussie dollar. Aussie has been one of my least favorite pairs lately. It has been relatively unclear. Alright, the one thing that is, one of the only things actually that is clear is if we see a move above this trend line here, that would be the possibility for a start of a strong move higher. But we have some significant resistance at 93. All right here. That is the real longer-term bull-bear line. If we manage to breach 93, we could see a move up to 97 or so. As long as we remain below 93, it's going to be tough for this market to really go anywhere, but sideways or down. In terms of where we're at right now, all right, if we drop down to a 4-hour chart, smaller trend line, resistance comes in, all right, something like this. You can see we're starting to tighten up a little bit. That is a possibility for a downward wedge, which if again we see that top trend line break could open up a test of this larger trend line resistance at around 91 or so. All right, so we'll look for a breach there. And then from there we could either see a strong move lower or eventually a breakout higher. But watch that descending trend line and then watch these 88.47 lows. All right, anytime that we have a decline to the degree that we've seen here in Aussie dollar, you want to be on the lookout for potential reversal patterns. There is a sloppy inverse head and shoulders argument to be made right now, and then you want to look at that 88.47 to see if we get a bounce there and a potential double bottom. If we do see that, the neckline of the double bottom is basically going to be 93 again. We could establish a nice 400 pip range between 89 and 93. And then below 88.47, and then it becomes again anyone's guess as to whether or not or how much lower this pair can go. Then we had Euro Kiwi and Pound Kiwi. Let's take a look at those real quick. All right, so this is Euro Kiwi. Euro Kiwi, a little bit tricky here. Not my favorite pair. All right, we have trend line there. We had a trend line here. You can see that there is the potential for a false break here on Euro Kiwi. All right. We pushed above this top trend line consolidation, top of a flag, however you want to call it. All right, we pushed above it. We actually closed above it, and then we rolled back over within it. So there is potential for a false break here, which would suggest a strong move down back towards the supporting trend line of 164. All right, so that's definitely something that you want to keep your eye on. Even if we don't make it down to 164, you would think a move down towards 168 could certainly be in the offing here. Some nice moving average support in that area. So that's definitely something you want to keep your eye on. If we manage to break back above this one, basically 171.90, 171.75, that would invalidate the false breakout. But for right now, that is something that you could keep your eye out for. All right, very nice decisive downward candle here in these last 4 hours. Decent close back within the range. So a very distinct possibility that we see that range continue to the downside. Pound Kiwi after today's UK news. We saw the pound rally pretty well across the board. Clear some of these drawings. One thing you do want to now have to look out for on pound kiwi is the potential for a double top here right around 2. All right, we can see we made a brief new high. Marginal new high, have not really made any progress since there. We're sort of consolidating under these previous highs. So if we do see a move lower from here, it would target this trend line support. All right, that'll be about 194 or so. So we'll have to keep our eye out on that. But both Euro Kiwi and Pound Kiwi have the potential to move lower here. All right, and a decent technical setup actually on both of them. But the momentum of the market is clearly to the upside. All right, on all of these pairs. So you want to be aware of that, but there is potential for a move lower here on Euro Kiwi and Pound Kiwi. Pound dollar, all right. Again, strong rally here. This is actually best viewed, I think, in the daily context. All right, we dipped down pretty strongly here at the start of the day, pre-Carney's speech. We just missed touching the 50 and 100-day EMAs. We closed about, we're going to close about 120 pips off the low, it looks like. And we also have held this trend line on a closing basis. We did get our trend line retest in 155, which I had been saying for a while. The problem was we accelerated below it, all right, on that news spike lower. But we have recovered. I still do very much like this pair to the upside. All right, this is a trend line retest. I like to consider it a trend line retest. The major next resistance level, right, it's going to be this area between 157.20 and 157.50. All right, you can see twice price has rejected that area. But I do think off this retest we could really get up towards as high as 159 or even 160. So pound does look pretty good here. Euro, all right, the euro has been obnoxiously trading, rounding a little bit here. 134 basically remains the major resistance area. All right, you can see we did briefly breach it here and we've fallen back. So keep your eye on 134, and then keep your eye here on this support level at 133. Drop down to the 4-hour chart. I'll show you where that second bottom supporting line comes from. All right, you can see it was support here. Sorry, it was resistance here. We broke above it, broke back below it, and then it was been support these last two touches. This is kind of the range we're looking at here on the euro. And all right, we made a we haven't been able to make a lower low yet. You can see here this spike down remained above the lows from the previous spike down. This spike down remained just barely above the lows of the previous spike down. All right, so the uptrend is still intact, if only barely. This 200-hour EMA, 200-period EMA here on the 4-hour chart, you can see this tested, but that is some nice support. If we do make a new low, can't really rule out a strong bounce off of this 200, all right, to highs. Really a 4-hour close below the 200-period EMA here on the 4-hour chart is really required to try to give try to scare some bulls and kick some bears into action. Until then, this like slow grind sideways and higher seems somewhat likely to continue. But euro definitely one of the least clear pairs that we have going on right now. Lots of just chop and sideways consolidation, not particularly great trading. Dollar CAD. All right, posted this out. I think I put this on Twitter. If not, I put it in the chat room. Nice retest here. The move lower has not been as decisive as I would have liked it to be. You can see we wicked into the triangle, couldn't close back within it. Strong move lower. Now we're sort of holding this support level here on dollar CAD. Any strong move lower, target 104.40, these previous peaks. All right, so that would be a level to keep an eye on for. Down 104.40 to 104.20, which is the 50% fib. That would be the levels to watch dollar CAD if you like to trade dollar CAD. short Euro Yen from 103.45 with a 128 target. That's my view. I like short Yen right now. I'm going to run through those. This is my Euro Yen chart. All right. I would, with those 128 targets, I would be somewhat cautious. I think that the next major bounce level for Euro Yen is going to be this trend line. That's at about 129.15. All right, so I would trim some of my shorts around that area, move the stop to break even. And if we break down, then great. Your 128 targets seem pretty much inevitable. But on the other hand, if we bounce, I would look to reestablish shorts closer to 131.70, which is the top side trend line, or represent the fourth test of that trend line. I think we could start to see a breakdown here. But this test, if we do come down to test 129.15 or so, it will be the third touch of that trend line. That third touch usually does provoke a reaction. So I would be cautious about holding a full position short. You said you're short from 130.45. All right, so you'd be about 130 pips in the green at that point. So I would definitely at that point at least look to take some partial profits just to make sure that they all don't evaporate if we do see a bounce off of this trend line. So keep your eye out on that trend line for Euro Yen. Dollar Yen, all right, testing some nice resistance here. This is a 4-hour chart. So this is a 50, 100, 200 period EMAs here on the 4-hour chart. We also have a mini 50% fib right in that area as well. All right. So major dollar yen support 96.74. So about 115 pips lower. And then below that, it's about 95.30 is the next major support level. All right, you can see where I got that from here. And if we do manage to breach that level, I do think we'll see a much larger turnaround on dollar yen. You can make an argument for a very sloppy but still existent shoulders pattern here on dollar yen. And if that does break down, that 93 trend line, the measured move is about 88. All right. So a significant move lower could be in the offing, but again, we need to clear that 93 trend line. So I do like the yen pairs lower, but we may see a bounce on all of them first. This is Aussie Yen. All right, Aussie Yen right now being held down by the 38.2% fib and the 50-period EMA, well, 50-hour EMA on the hourly chart. All right, up to 87.75, I think is terrific resistance. I think 87.50, 87.75 would be good entry orders for shorts. With a stop above this, basically about 88 or a little bit above 88 for a strong move lower. You can see I have some numbers here. My E-wave isn't great. I don't use it a lot, but this does look like we're in the middle of completing a third wave down, a complex third wave down. So sort of keep your eye on that. If we do see that, all right, it does target around 82, so plenty of room left to the downside on Aussie Yen. Dollar Swiss, all right, continues to hold that horizontal support area, but really can't quite manage to get a rally going. 15, we could start to see a squeeze higher. Euro Swiss, testing that trend line. We briefly dipped below it, starting to try to push back above it. 121.60 or so is the level as which I start to get interested in buying Euro Swiss. Until then, I'm bored of it and don't have any great interest in doing anything with it. On the other hand, Pound Swiss, I think has some terrific upside potential. It's a 4-hour chart of Pound Swiss. You can see that dip down took us to retest this trend line. You can draw this trend line in a bunch of different ways. It's not a very clean trend line, but this is one way to draw it into a perfect touch. And we held that 6.8% fib on a 4-hour and daily closing basis. All right, and if that is indeed the case, the extensions, all right, Fibonacci extensions for this suggests at least 147.57 targets, which is about 400 pips above market. So Pound Swiss does have some significant upside. Your stop would need to be below the low, so it would be about 107, 100 something, 150 pip stop or so. All right, so it's a much larger risk than most people are willing to take. But if you're willing to hold out for those targets, your risk to reward ratio is pretty great. So you could always consider reduced leverage. Any other requests while I'm running through pairs? Please feel free. Kiwi dollar. All right, we held this. Kiwi dollar is annoying here. We held this double bottom type situation here. All right, just below 775. We're trying to break back above this trend line. I do think we could see a key move higher up into the 79.50 region before we roll over and continue lower. But it has been struggling lately, and we'll see if the trend holds where at the beginning of every Asian session, so in about 2 hours, we see significant Aussie and Kiwi selling off. All right, remember last night, right around about 2 hours from now, we saw these two strong red candles here on Aussie dollar. So we'll see if that reverses itself, and if we get some buying. Okay, this is the E-minis. This chart has remained untouched for quite some time now. I was off rally up to 1675, but I made it about 1665 before we sold off again. We're now roughly here on the chart. We'll see if we go to the daily chart. All right, we are holding this 100 period, this 100-day EMA barely. Trendline support again holding, but barely. I still do think we see a sharp rally here sometime in the next 2 days to shake out some early shorts and get people, sucker people back in before the real breakdown will come sometime in October. We'll see exactly how that plays out for the timing wise, but 1675 is your major resistance level that you want to keep your eye on, and above that, that 1705 top is the next major resistance level. So do you think the potential for a larger head and shoulders with this smaller head and shoulders forming the head is very possible? And if so, we would be looking for a move below 1650 or so, but it would need to come a couple months from now to complete the pattern. So keep your eye on that for E-minis. The Nikkei is another important chart to keep your eye on. This is the Japanese stock market, just so you know, in case you weren't sure. All right, we do have the potential of a descending wedge here. Those do sometimes suggest, well, they always suggest a bullish breakout. They don't always work. So we'll see how exactly that plays out. We continue to break down from here. All right, this 200-day EMA sits below at about 12,669. All right, but an upside break and we could see new highs. All right, so you got to be a little bit cautious here in the Nikkei. We could go really either way. Whichever way we go, we'll go pretty strongly. And whichever way the Nikkei goes, that's which way dollar yen and the rest of the yen pairs are likely to go as well. So keep that in mind. All right, covered most of the majors, most of the crosses. Any other requests that you'd like me to take a look at? No? All right, well, thank you very much for joining me, guys. I appreciate you spending some of your Wednesday afternoon with me. Good luck trading the second half of the week. Relatively quiet risk docket for the second half. All right, we have U.S. GDP tomorrow, along with unemployment claims. And then Friday we have Canadian GDP. And we have some somewhat significant Aussie and Kiwi data tonight, but those are pretty much likely to be overlooked except for some short-term volatility. So we'll see if we get a quiet finish. With the way equity markets have been trading lately, I suspect a quiet finish is unlikely. So, you know, should be hopefully an interesting end to the week, and then we're getting very close to September, and things should really start to pick up then. So good luck. Enjoy the second half of your trading week. I'll talk to you soon.